So good morning, everyone. Welcome to the working group on tax expenditures. This is a special study group of the 130th legislature. And we are here for our first meeting, first out of potentially four, to discuss some changes to the process and the process of tax expenditure review that involves multiple state agencies. So welcome, everyone. We'll begin with introductions of working group members. And so I will call folks as they appear on my screen. We'll start with Representative Millett.
Good morning, everyone. I'm Soren Millett. I represent House District 71, towns of Norway, Sweden, Waterford, and West Paris.
Thank you. Senator Bailey.
Thank you, Mr. Chair. I am Senator Donna Bailey. I represent Senate District 31, which is currently the towns of Saco, Old Orchard Beach, Hollis, Leamington, and part of Buxton, but may change in the near future.
Very good. Thank you, Senator. Senator Pouliot. Senator, we maybe have an audio challenge.
Can you hear me now?
Yes.
I figured I have to have my laptop open because the audio comes from there. So sorry. Good morning, State Senator Matt Pouliot, represent Senate District 15, the towns of Augusta, China, Oakland, Sydney, and Bassboro.
Thank you. Representative Kryzak.
Thank you, Mr. Chair. I'm Ted Kryzak. I represent District 20, Acton, Lebanon, and part of Shapley.
Thank you, Representative. Representative Stover.
Good morning. Thank you, Mr. Chair. My name is Holly Stover. I represent House District 89, including the towns of Boothbay Harbor, Southport, Edgecombe, Westport Island, and part of South Bristol.
Thank you, Representative. Senator Bennett.
Good morning. My name is Rick Bennett. I have the honor of serving 13 towns in Cumberland and Oxford County in the foothills and beautiful lakes region of Western Maine in the State Senate.
Thank you, Senator. And finally, House Co-Chair Representative Terry.
Good morning. I'm Mo Terry. I represent District 26, the west side of Gorham, and I'm very pleased that we're getting together to talk about our tax expenditure review process.
Thank you, Representative. And I am Nate Libby. I proudly serve all of the people of Lewiston in the Maine State Senate, and I serve as Senate Co-Chair of this working group. We are also joined today by staff from two different offices of the legislature, and I'd ask them to introduce themselves individually, and so we'll start with Julie Jones.
Sorry, I had to unmute. Hi, I'm Julie Jones. I'm a senior analyst with the Office of Fiscal and Program Review, and I am the staff person for the Taxation Committee.
Thank you, Julie. And Ariel Ritchie.
Good morning. I'm Ariel Ritchie, and I am an analyst at the Office of Program Evaluation and Government Accountability, and I am on the team that conducts some of the tax expenditure reviews.
Thank you, Ariel. So members were sent an agenda that was put together with the support of our two staff members and the co-chairs. We hope this captures enough items for us to get our work started today. But obviously, if there are other items that members would like to bring up this morning in our introductory meeting, I think that would be very appropriate. What we had envisioned was first having Ariel and Julie walk through some of the background and history that they have put together in a document for us that was emailed to you. The next part of our agenda, we'd like to walk through a timeline for what we'd like to accomplish and when and in what order, and in particular, identifying who among the interested parties we would like to bring in for some conversation on this topic. And then talk about the final steps of trying to pull all this work together and issue a report. So with that, unless there's anything any member would like to bring up off the bat, I'd recommend we go to number 2 on the agenda, and have Julie and Ariel walk through a bit of the tax expenditure review history and background. Seeing no objection, Julie and Ariel, please take it away.
Thank you. I think I'm starting. We sort of divided up where I have a lot of experience with the past history before we have the current tax expenditure review process through OPEGA and the Government Oversight Committee. So I'm going to do essentially the ancient history of tax expenditure review in the legislature because there is quite a bit of it. And I'll summarize it. I won't go into too much detail, but if you want more detail, I'll try to give you answers. I was probably around for most of it, but not all of it. It starts in 1977, actually, which actually is even before my time, although not all that much. In 1977, the legislature, well, there was sort of nationally a move afoot for legislatures to consider tax expenditures and what their impact was. Tax expenditures being provisions in law which result in a tax benefit of some kind to a particular entity, which therefore results in a reduction in revenue. As you're certainly familiar, legislatures go through the budget process of looking at the costs of providing programs, the state providing programs every 2 years usually. In some states, they do it every year. Well, we sort of review it every year, even though it's a 2-year budget. And the Appropriations Committee goes through and looks pretty carefully at all of the programs and reviews and then reports out a budget to fund the activities, and the legislature goes through its process and enacts it. Tax expenditures, on the other hand, without tax expenditure review, they're on the books, they happen. Nobody necessarily looks at them unless there's a process specifically set up to do that. In 1977, the legislature enacted its first tax expenditure review provisions. What they did was to put the responsibility on the Taxation Committee to review, at that point, sales tax exemptions and property tax exemptions. We no longer do property tax provisions. They're mostly a municipal revenue impact rather than a state revenue impact, although there now is state reimbursement for property tax exemptions and after 1978, at least for at least 50% of them. So that is there, but we no longer review them as part of the tax expenditure process. The Taxation Committee at that point started meeting during the interim to review those provisions. In 1979, it was the statutes were amended to provide that it would be a 4-year rotating process. So half of the sales tax exemption each year for 2 years, and then half of the property tax exemptions each year for 2 years. Taxation Committee would meet, go through all of it, and the statute had provisions in it requiring them to identify the purpose, try to identify who benefited, try to identify what the fiscal impact was. That information has always come from Maine Revenue Services, but they were asked to provide that to the Taxation Committee. And then to make a report to the legislature with recommendations if they had any. In 1979, income tax expenditure, no, in 1979, it was made a 4-year rotating review. I said that already, I think. In 1985, income tax expenditures were added to the list, or at least some of them. There was a specific list at the beginning of basically tax credits mostly. And those were also started to be reviewed. At some point, though, in the late 80s, the legislature became kind of not so attentive to their responsibilities to review these issues. There were some recommendations made early on. There were a couple of instances where the Taxation Committee, as part of its review, suggested that perhaps some sales tax exemptions were no longer meeting their original purpose and could be repealed. And a couple of them were repealed. They were generally ones that essentially no one was claiming any longer. Every once in a while, we do come across those things. Into the 90s, the taxation committee came to the conclusion at some point that it was spending a lot of time putting all of this information together, and the legislature was not doing very much with it after it had done it. And they decided to, in a resolve in 2001, directed Maine Revenue Services and OFPR to, it was not me at that point because I was not staffing the committee at that point, but wait a minute, yes, I was, 2001. I was not staffing the committee between 1988 and 1998, but a few years before that and all of the years after that, I have been staffing the committee. Anyway, in 2001, the legislature in a resolve directed directed OFPR and Maine Revenue Services to review the process and to come up with a recommendation and options for reviewing tax expenditures. At that point, that review was done. It was an internal staff review. So essentially, the folks from Maine Revenue Services and I would meet during the interim and made a report back to the taxation committee. At that point, the recommendation was that rather than the taxation committee gathering all of the introductory information, that Maine Revenue Services would do that. So we directed Maine Revenue Services to come up with that information of summarizing the tax expenditure every 2 years and identifying the potential recipients, how many of them there were, if they could identify that, what the fiscal impact was. They were not directed to make any recommendations to the legislature necessarily. And in 2002, the legislature enacted those provisions. Can't take a call, I'm in a meeting. Sorry about that. That's why I shouldn't answer phone calls during the meeting because I get distracted as to where I was. You're all laughing at me. I know, that's okay. I enjoy being laughed. Sometimes I even try to be laughed at.
We're not laughing. We're not laughing at you.
You're laughing with me. Yes, thank you. Either way, it's fine. So Maine Revenue Services every 2 years. This legislation is actually still on the books. It is the legislation which generates Maine Revenue Services Red Book, or the Maine State Tax Expenditure Review Report, sometimes referred to in the OPEGA report by the MSTER and called the Mr. Report. But those of us on the tax side have generally referred to it as the Red Book. That happens every 2 years, and the provisions are still in statute saying that in an odd numbered year, which is when the report is presented in January to the taxation committee, that the taxation committee will review that report, and if it decides that it wants to make any changes to the tax expenditures as a result of that report, it has the authority to introduce legislation. In even numbered years, the taxation committee is essentially given broad review to look at any issues that have been identified that they just think they want to look at, or to review overall tax burden and tax policy. They have done this a couple of times, but not in recent years. So we went along for about a decade with the Red Book and the taxation committee process, review of that Red Book. In 2013, the legislature was experiencing a budget deficit, meaning the cost of a budget to continue services authorized by statute was more than what, excuse me, than what the forecasted revenues were. There now being a revenue forecasting commission, which every year projects what, or twice a year actually, projects what they expect revenues to be for the current biennium and the subsequent biennium. In that year, the Appropriations Committee was confronted with the task of trying to figure out how to fund the budget, whether to reduce programs, something that they can do, obviously, in the budget, because they're intimately involved in review of that and reporting out of an amendment to the budget bill. Tax expenditure programs, on the other hand, they do get a chart from the Red Book. The statutes also provide that Maine Revenue Services must provide that information. Well, not even Maine Revenue Services, but that the administration must provide that information to the Appropriations Committee. So they receive the chart that's in the Red Book, which identifies the cost of each tax expenditure. They started looking at that chart and saying, we should maybe look at that as a way of getting, of being able to fund the budget. Not only should they be looking maybe at how to reduce programs, but maybe also how to reduce tax expenditures in order to make sure that they could fund the budget. At that point, they recognizing that, well, the idea was to repeal tax expenditures were not accomplishing their purposes or that were not effective, and that could be more easily dispensed with than some of the ones that were performing a more important function effectively. But they realized at that point that they didn't really have any way of evaluating which tax expenditures fell into that category of being ripe for repeal, or at least higher on the list of targets for repeal. So they put a provision into the budget that year. It was Public Law 2013, Chapter 368, Part S in the budget bill, which created the Tax Expenditure Review Task Force. May sound like a familiar idea. It was composed of legislators, but not just legislators. There were also people from interested party groups and from the administration who were included as part of that task force to come up with a process for reviewing tax expenditures to evaluate which were more effective than others. And they also, because they needed the money, included a provision recommending that the task force come up with $40 million through the elimination of tax expenditures. You may feel relieved that you have not been asked to do a similar type of activity. But that task force did, in fact, recommend a number of options. It did not particularly prioritize which ones it preferred, but they identified a number of options that the Appropriations Committee might consider as tax expenditures to be repealed. It was quite lengthy. If you're interested sometime, I've got the report. They also recommended that OPEGA be the party responsible for evaluating tax expenditures and directed OPEGA to work with the Taxation Committee over that interim to come up with a process. We all did that, OPEGA and me and the Taxation Committee, and we came up with a legislation that essentially constitutes the process that we have now, directing OPEGA to review tax expenditures and to set up the process that was subsequently gone through to identify full review and expedited review. And legislation was created by the Taxation Committee out of that process, which enacted our current law. At that point, well, at this point in the history is where I'm going to kind of turn things over to Ariel, because at that point, it really becomes an OPEGA GOC oriented process, at least at the beginning in the evaluation of tax expenditures. So over to you, Ariel.
Thank you, Julie. Just for a bit of background, I've been with OPEGA since 2017 and working on tax expenditure reviews for about 2 years. So I don't have the historical knowledge about this process that Julie and some others do, but I can bring you through some of the backgrounds that I've been able to pull together from the documents. I'm just going to share my screen. Can you see that? Okay, so this is the document that was sent out to you in advance with the history. Julie covered the report of the task force. There's a link in the document if you have any desire to have a look at that and look back at the background. So I'm going to pick it up here at March 2015. So this was, OPEGA was tasked by the task force with developing a proposal about how to review tax expenditures. And so that was produced and submitted to the GOC and the Taxation Committee in March 2015.
Ariel,
Yes.
we're now looking at your desktop screen.
I moved it. Okay. If I am not looking, I've got multiple screens. So
It's back up now.
okay. All right, that is helpful. Thank you. So what that report did was develop a proposal, and it defined and described the elements to be considered when implementing an ongoing legislative tax review process. The resolve that directed it was very specific in terms of what should be included. And so that proposal included classification of individual tax expenditures, identification of criteria for expedited review, data and data sources, a schedule, resources, and proposed statutory revisions. And just looking at, I am at the moment looking at that proposal, and really what that does, the core of it, is to classify all of the tax expenditures and assign them each to one of three categories. That's a full evaluation, an expedited review, and no review. Now, it also set out the evaluation parameters for a full review based on guidelines from the resolve. And it also identified criteria for the expedited review, including identifying the elements of that, again, based on guidance from the resolve. So that then was enacted PL 2015, Chapter 344, an act to improve tax expenditure transparency and accountability. So this is what enacted the core of the current process within the OPEGA statute for the review of tax expenditures. So this included that the GOC, in consultation with the Taxation Committee, would assign each tax expenditure to a review category. The categories, again, being full evaluation, expedited review, or no review. For full reviews, it set out a process for that evaluation, with the GOC approving expenditure, purpose, intent, and goals, intended beneficiaries, the evaluation objectives, and appropriate performance measures. And it does build into that a process for the Taxation Committee and other stakeholders to provide input. The full evaluation reports are by statute to be considered by the GOC and the Taxation Committee, ultimately requiring the Taxation Committee to submit to the legislature a report documenting its activities and recommendations. For the expedited review, the process is in fact conducted by the Taxation Committee, which includes assessment of the tax policy in each of the individual expenditures. And in order to support the Taxation Committee in their role in conducting those expedited reviews, statute provides OPEGA to gather and submit specified information. The Taxation Committee then submits a report to the legislature on the results of the review that it conducted. We then had a change to statute in 2017. So this originally statute set out a 6-year cycle for full reviews for all tax expenditures assigned to the full review category to be completed in a 6-year cycle. In 2017, there was a statutory change, an act to implement recommendations of the GOC to improve the efficiency and effectiveness of legislative reviews of tax expenditures. And I've put here from the, as this was sort of prior to my time in working in tax expenditure reviews, I just pulled there from the enacted law summary. The bill removes statutory deadlines to provide more flexibility in scheduling, completion, and reporting on full evaluations to allow for a better fit with the legislative schedules and to ensure OPEGA can complete a comprehensive and quality review of each program within OPEGA's available capacity. I looked back at the committee file to get a bit more context about this change, and there is within that, which I can send if it would be helpful, testimony by Representative Mastracchio, then who I believe at the time she was co-chair of the Government Oversight Committee. That gave a bit of an explanation about the reasoning for that change in the timing. I'll just read a bit from that. Over the past year, it has become apparent that meeting the statutory deadlines and adhering to a 6-year cycle would mean jeopardizing the quality of the evaluation effort and final report. It also became apparent that some of the statutory deadlines were not realistic with regards to the legislative schedule. It goes on to describe the bill. This bill is intended to get statutory requirements and expectations more in line with what has proved to be realistic and ensure that OPEGA can produce a quality result for the legislature. The GOC has consistently been in favor of completeness and quality rather than quantity of evaluations. The overall objectives of the statutory changes proposed in the bill are to provide flexibility in scheduling, completion, and reporting on full evaluations, to allow for comprehensive and quality review of each program and a better fit with legislative schedules, and to adjust the expectations for review to better reflect the realities of what comprehensive evaluations require and OPEGA's capacity for conducting multiple evaluations in any given time period. It then goes on to talk a bit more in detail about the plans for OPEGA to have at least 2 evaluations, tax evaluations in progress at any given time. So that gives a bit of background about why that change was introduced to adjust the timetable. We then have the last statutory change was in 2019. This is a relatively minor change. It relates to the expedited reviews, to have them, the timing more in line with the tax committee's schedule. I believe at the time, the tax committee was required to consider it, I think, in July, and that did not seem feasible. So the deadline was changed for OPEGA to submit the information for expedited reviews in December, and then the taxation committee would consider that, I believe, January to March. So that is a run through of the legislative history. Now, looking at what expenditures have been completed, I'm not going to go through this table in detail, but it gives a summary of the evaluations that OPEGA has completed, the full evaluations that OPEGA has completed to date since the process was started, and the follow-up actions by the GOC and the taxation committee. So what we had was in 2017, we had 2 reports, the New Markets Capital Investment Credit and Pine Tree Development Zones. In 2018, there was a special review, not formally a full review, of the major business headquarters expansion. That was as a result of legislation requesting GOC review of the provisions on a newly enacted credit. In 2019, we had 1 report, the employment tax increment financing, and in 2020, we had 3 reports, that is of 4 expenditures, we combined together into a single report the review of the Better and Betty programs. So that is 4 expenditures reviewed in 2020. And in 2021 so far, recently in August, the Main Seed Capital Tax Credit report was released. And I believe we are currently on schedule for a further report to be on the Historic Preservation Tax Credit to be released by the end of the year. Also briefly, the expedited reviews conducted by the Taxation Committee and associated follow-up this year will complete the full cycle. So each year there are 13 to 17 individual expenditures in these broad policy areas where OPEGA has provided information and the Taxation Committee conducted the evaluation. That is continued on a 6-year cycle and will complete this year. We're on target for that. But as I said, the statutory deadline for OPEGA to provide the information to taxation is in December. That will be released and provided on time, and that will complete that entire suite of expedited reviews in a first cycle. That is all I have to cover about the history. So unless there's any questions that either Julie and I can assist with.
Thank you, Ariel. Thank you, Julie, for very thoughtful and thorough overview. I see we've got Senator Bailey with a question or comment.
Thank you, Mr. Chair. So 2 questions. The first is, so what is the total number of full reviews that OPEGA is tasked with doing? And then my second question is, at OPEGA, do you have like dedicated staff that works on these reviews? And if you do, I mean, how many people are we talking about? Is it just you, Ariel, or are there 2 or 3 people? So those are my 2 questions. Thank you.
I can answer a bit about the staffing, and I should also say that there is in the agenda when we are due to hear from other agencies, that will include in that list the director of OPEGA, who may be able to speak more accurately about staffing needs and requirements. I can give a bit of a sense and note down that that may be something that you want to hear a bit more about. So there has been some dedicated staff. I'm not sure exactly of, it has evolved over time. Initially it started with, I believe, 1 full-time and 1 part-time individual. There was a period when there was a job share in there, so I'm not sure if that actually came out to 2 FTEs or if it was 1.5. We have in the office over the last 2 years shifted priorities a bit so that some of those individuals who have not been working, not specifically allocated to taxation expenditure reviews, such as myself, have started to be more involved. So now it is a bit more of a mix with staff at any given time might be doing some tax reviews and other non-tax reviews. So it's become over time a little less, more individuals, but less dedicated staff in terms of a more of a split of time. I think that's really all I can say about that, but I can certainly note when the director comes to speak to you that you will want to hear a bit more about staffing and resources more formally. As for the total number of full reviews, that's not a number I know off the top of my head, but what I can do is look it up and come back to you And I can do that while we're on the screen, but I don't want to hold up any other questions. I will jump in and give you that number when I'm able to tally that up.
Thank you.
Thank you. So I would like us to move to agenda item number 3, which is committee members sort of sharing their thoughts on what's working well, what are the challenges, what ideas members may have for ways to improve this process, and where we may need additional information. I'd very much like to hear from working group members at this time on these questions, and I think as well, we'll probably ask these same sets of questions at our subsequent meetings and of the folks that present to us, because this is going to be a certainly an iterative process where we are putting lots of ideas out on the table and seeing what might stick. So are there members that are interested in sharing thoughts on the 4 items that we've listed? Areas of improvement, areas of strength, suggestions for changes, and areas where we may need new information. Representative Miller.
Thank you, Mr. Chair. Since I raised some questions in GOC back in the winter and early spring on this, the need for this kind of review, I want to be forthcoming and straight with my intent is not to be critical of the history. What Julie gave us was very helpful to look way back in time and see how things have evolved since the 70s, but to try to focus on the best use of staff time and policy committee time to get to outcomes that are both measurable and consistent with the intent of the statutory evolution. So if I were to comment on the agenda items, I would say in category A, I think that we've done a reasonably good job since the statutory refinements in the 2015-17 era of staying on schedule. And a lot of work is accomplished, both in the policy committee at taxation and the work of OPEGA staff. And I would say my experience on GOC and the 129th and 30th is that there's a high level of quality of staff work. So my purpose in raising issues about time for review were not designed to be critical of what's gone on in the past. My concerns, which fit more in category B or item B of agenda item 3, are more related to, first of all, the scope of work, given that both the taxation committee and GOC, along with OPEGA staff and taxation staff, are spending a lot of time complying with the statutes at a time when we obviously have a full legislative agenda before us. So that time commitment, particularly at the OPEGA staff level, started to become a concern for me because, as you know, Mr. Chair, we were pivoting back and forth in both the 129th and 30th with child welfare and child protection issues. Obviously, we've gotten into some reviews of the workday program and multiple issues that have come before us that are probably not unique or not normal and have required a lot of pivoting by OPEGA staff and the GOC. I secondly felt at times when the reports came to us, there seemed to be a disconnect between the appropriate executive branch agencies and the lack of coordination or communication between and among them. We would hear from DECD on a portion of a review and MRS on a portion of a review, but not a lot of indication that there was a lot of interaction between those agencies and a common recommendation evolving. So I felt the need for more agency coordination, and at the end result of GOC acting on a report from OPEGA, and again, I'm talking about the full reviews, we struggle often on what our options are. We can approve the report, we can refer it to taxation, we can make specific recommendations, but I find myself struggling for how to get to the point of a measurable outcome discussion when we could actually say among us, those of us who are in the legislature, we have really taken on a difficult assignment. We've come to a conclusion that makes sense, and now we can work forward with proposed changes that would be more measurable and more indicative of what we as legislative policymakers want to see happening. So I felt that was those are the challenges. When you get to item 3C, change and improvement, I know with the pandemic year and a half that we're now struggling to work our way through, we've lost sight of the economic development strategy that DECD was tasked with developing and early delivered on in calendar 19. And they are tasked in statute to relate that strategy to some of the economic development tax expenditures in terms of coordination with the strategy and whether they're meeting the statutory outcomes, which, by the way, I think are very well outlined in the Title III statute that not only defines the 3 steps, full evaluation, expedited, and no evaluation, but really gets into those questions, including the but-for questions of why is this expenditure, if it is designed to promote economic activity in Maine, why is it working or is it not working? And if it's not working, how could we make it work better? So those issues, I think, are more a matter of the fact that in the pandemic year, we haven't really been able to get back to that strategy and start aligning report recommendations with economic development strategy, coordination, and outcomes. That's kind of a wordy discussion, and I admit to being a little bit nerdy on this because I don't like to see people do busy work with no potential for value added or outcomes that in the long term future legislatures and the employers within the economy could see measurable results and benefits from. So I will defer on item 4 or D because I think we're getting a lot of information today, and I spent some time reviewing it all. I've still got a lot to learn, and I learned a lot from the first presentation by Julie and Ariel. So that's where I'm coming from, and it's not to be critical, it's just to try to say, can we as legislators from the 2 main committees sharpen this process up and get away from what might appear to be at times busy work toward outcomes that generally help the economy and benefit future legislators and those who invest in the Maine economy.
Thank you, Representative Millett. I appreciate that set of comments and the detail and your interest here. Ariel.
I can just jump in with the answer to Senator Bailey's other question, which I was able to count up. So there have been 8 tax expenditures that have been subject and completed for full evaluations, 2 that are in progress, and 22 still on the schedule to be completed.
So Ariel, that means we've got about 32 altogether.
The list is changing every year when new programs are enacted or repealed. There is a process to either move them from one category to another or remove them entirely or add them to the category. So that's kind of a point in time rather than a fixed number. I believe there was a new program that may be added when the committees consider the schedule. So that it's always in flux, but that is the current point in time.
Okay. And so 8 have been completed since calendar year 2015 or 2016?
I believe they started in 2017. or maybe perhaps the process started in 2016 with the first, at some point during 2016 with the first report produced in 2017. And just as a general kind of aside, the amount have increased over time. I think there was probably fair to say that there was a time in the beginning where there was a bit of a learning curve whilst this was a new process getting started. So I wouldn't necessarily say that that is a representative amount of evaluations in that time period.
Sure. With all that said, however, it appears that at our current pace, it's going to take us far longer than 6 years to go through a cycle. Would that be a safe statement to me?
Yes, and that was deliberately the intention when the statute was changed back in 2017 to move away from that 6-year cycle.
Understood. Thank you. Julie.
Yes, thank you. I meant to mention it when I was going through the history, but there's sort of a side parallel process here that is also related to some of the tax expenditure review, and it has to do with DECD and its review of economic development incentives. There actually was back around 2000, 2001, another task force created that set up something called the Economic Development Incentive Program. There was a commission that was created, to evaluate economic development incentives, many of which are tax expenditures. They also include programs that provide like loans or funding for economic development purposes. But maybe 8 or 10, I haven't counted the exact number of the items that are covered under the tax expenditure, things like Better and Betty, ETIF, a variety of those kinds of credits are also part of this economic development incentive process. Originally, there was a permanent commission established to review these economic development incentives and determine whether they were effective. This was actually legislation sponsored by then Senator Shelley Pingree. The commission met and tried to do its first evaluation. It was composed of, again, legislators and people from a variety of perspectives. There's somebody from MMA, somebody from Revenue Services, somebody from interested parties groups. After its first year of trying to evaluate how effective these things were, it came to the conclusion that it was not able to do so because there were a lot of, I think you'll identify with this, a lot of political aspects involved in why particular provisions get enacted into law. It's not all entirely how effective they might be as the reason why they get enacted. They came to the conclusion that they were not really in a position to evaluate them. They recommended that the commission be repealed, and it was. However, there are some provisions in law from that time period that remain. One is a provision, it's been amended several times since then, but it is currently on the books, and it's in Title V under the DECD statutes relating to economic development. And it currently provides that by February 1st, 2021, this past February, and every 4 years thereafter, DECD shall contract for an independent comprehensive evaluation of economic development incentives, which is defined to include tax expenditures that relate to economic development. They contract for this evaluation. The last one was done, I think, 4 years ago in 2017, but the statute have changed over the time. So it hasn't always said every 4 years, it's sometimes said other things. The last time I spoke to Kate Boy at DCD, they were unable to contract with someone to do that on February 1st of 2021 due to COVID issues of all the difficulties that are surrounded with that. Also, there may have been some issues with regard to funding. There is a special fund that's set up to pay for this contract. when it was done back in 2017. I think it cost $400,000. I'm not sure how much is expected to be available for it now. But like I said, it was maybe a couple of months ago that I checked with her. I have not checked this month, so I'm not sure if that status has changed. There is also, interestingly, a provision in statutes that date back to that 2001 Economic Development Incentive Commission legislation that says that the department, meaning DECD, shall review each economic development proposal, which is defined to mean legislation which proposes an economic development incentive, and any information related to the proposal, and shall report to the legislative committee with jurisdiction on the extent to which the proposal meets specific criteria. The law requires that the economic development program proposal have a name that accurately describes the nature of the program, has specific stated objectives, such as the number of jobs that will be created, wage levels, benefits associated, and what the value to the state or community within the state will be. The legislation should specify a method of measurement, whether the objectives have been met, require that the business that received the benefits report on the use of those benefits, require the committee to evaluate the provision on a regular basis, and provide penalties if the business doesn't meet the goals that it said that it intended to meet as a result of the incentive, provide a cost analysis over a 10-year period, have a clearly defined public purpose, and report performance data specific to its goals and objectives. That's basically it. As far as I know, that provision has never been implemented. It says that DECD will do this, which sort of implies perhaps, but it doesn't say directly, that DECD would look at all legislation, try to identify one of these proposals when it saw it, and then do this evaluation and report to the committee to which the bill has been referred. But there's nothing that directly provides a process for how that would happen. And as far as I know, it never has happened, but that legislation is still in the book. Just want to bring that to your attention because it's relevant to the process that OPEGA goes through when it's evaluating proposals. In recent years, once OPEGA started the process of evaluating expenditures, and it became clear that a lot of things that would be desirable in order to evaluate the credits, the incentives, were not actually provided in legislation. So being aware that that is now the case, because as a result of the OPEGA reports, identifying that as a concern when the taxation committee at least considers these types of legislation to establish incentives, they have tried to put that language into the statute that requires a lot of the things that would be necessary under this economic development proposal statute. And it usually talks to the director of OPEGA and says, what would you like, you're going to have to evaluate this. What would you like us to put in the statute for these taxpayers to provide as data or information? How should we go about doing this? And the agents, OPEGA has been very good at working with the taxation committee to provide that information, and we've tried to do that. So the more recently enacted statutes have that type of information in them, generally speaking. Now, they're not all enacted out of the taxation committee. I just sort of mentioned, just because it's probably helpful to know at some point, Pine Tree Development Zone legislation has never gone to the taxation committee. It has always gone to what used to be the LCREG committee and is now the innovation committee. And the report that OPEGA did comes to tax, but it's been the IDEA committee or the LCREG committee previously that has considered all legislation related to that. They get copies of the report as well, so they're aware of what OPEGA is reporting, but it's not something that goes through the taxation committee, just that one. But sometimes things get created in a budget bill. Sometimes they come out of a different committee. Renewable chemicals, I think, originally came out of the environmental committee. So these things sometimes happen in other places. So they're not quite as aware of the evaluation parameters that the taxation committee would be. Sorry to sort of run on about that, but I thought I ought to talk about some of those things as part of the soup.
Thank you, Julie. I see we have two members in the queue. So Senator Bennett, followed by Representative Terry.
Thank you, Mr. Chairman. I just want to return to the question you put there about our perspectives on discussing the process here, and in particular, I appreciate Julie's just recent information there. You know, I'm new to the Government Oversight Committee and this whole process, but I have a couple of insights that have occurred to me about this. And one is that we have extremely limited amount of time and energy in the legislative branch to do a lot of work and to focus our attention, the public's attention, gather information, and to make effective change. I think the Government Oversight Committee in OPEGA is a very special resource that needs to be extremely careful about the application of its energy and where it goes and what we focus on. I think Sowen's Representative Millett's use of the term busy work struck a chord with me. I believe our work needs to be focused on things which are urgently in the public for and demanding attention. And we should try to reject anything that is going to take away from that. I'll give you an example that, you know, we're currently in the middle of doing the seed capital tax credit review. And one of the takeaways from that for me is that considering these tax expenditures, for example, in a vacuum, doesn't really make sense. I mean, as was just mentioned, you know, there's been other efforts to look at the efficacy of programs and the effectiveness of public spending on these programs. And by looking at them piecemeal, it really doesn't give you the whole picture. We learned that there's all kinds of things that the seed capital tax credit, for example, is related to, and it's part of this ecosystem. Well, sometimes it's better, rather than just chasing our tails and doing busy work on one little piece of that, maybe it's better to take an ecosystem approach to this. It sounds like it's been done in the past. Sounds like it's still on the statute to do this currently by the executive branch, and they're not necessarily attending to it. And yet we in the legislative branch are spending all this energy and time on these extremely limited resources for us that OPEGA and the Government Oversight Committee particularly represent in like doing our little piece of it. And I find that really frustrating. And I think it's bizarre to use our energies in that way. I looked at the GOC mission statement today, and one of the lines is, the committee seeks to ensure public funds are expended for intended purposes and that programs and activities are effectively, efficiently, and economically managed. By directing a large amount of our limited resources to one small piece of state government's purview and activity, and by locking that time in, means that we have a huge opportunity cost as a legislature and as a committee away from other pressing needs. So I embrace the purpose for this committee, because I can already see that a large part of OPEGA and the Government Oversight Committee's purpose is being sucked up by this one extremely narrow area of our activity of the legislative oversight. And we can't even do that, in my assessment, well, because we're doing it on a piecemeal basis over periods of many years rather than doing it on an ecosystem approach. So I welcome the purpose of this committee, and I hope I answered your questions under number 3. Thank you.
Thank you, Senator Bennett. Representative Terry.
Thank you, Senator. I will also focus on number 3, on C, on ideas for change and improvement, because I agree with Representative Millett and Representative Bennett that we are, the work that's been done has been great, honestly. I mean, incredibly thorough, for sure. One of the things that sort of struck me, which prompted me to raise my hand, was that what Julie was saying about recent expenditures that have been passed in the legislature, and this list of standards or lists of data collection, essentially, that we have asked for OPEGA to help us develop for some of these newer things. I think that going forward, when we do create an expenditure, or when we do create, business development expenditures, not just in taxation, but in IDEA or wherever, that we have this set of standards that OPEGA has asked us to collect data on from the get-go. Most of these programs require a yearly application. So it's not like there's no opportunity to collect information from, well, I'll just put out there, businesses at this point. We can collect that information as part of the application process, or part of the reporting process after the year is over, however we want to do it. But going forward, I think that's super important. And then as far as the, collecting data for the list of expenditures that we've got in the queue, I think we have maybe not the time for the ones that are in process right now, but going for the ones that are going to come up eventually, if we keep going in this direction, that we come up with that same set of standards, that same data collection in the yearly application for these programs. So when the time comes for the review to happen, OPEGA has the information that they need. There's no going to committees and asking what kind of information do you want to collect, because a lot of times when that question is being asked, it's a new committee, it's a group of new committee members, because the legislature changes every 2 years, who don't have a basis necessarily on what they're looking for. So going forward, reviewing the list of reports that are due and coming up with those standards ahead of time. And then also, to Representative Millett's point of the departments not speaking to one another, not communicating with one another, I think part of that is, I know from at least some of the departments, that there's a confidentiality thing that goes with a lot of these kinds of programs. So it's difficult for them to talk to one another, for sure. But I think we as a legislature have the opportunity to help them develop some sort of communication program where they're not necessarily giving confidential information, but they're giving broader information that is pertinent to each report. I think that we have the, I hope anyway, that we have in this group, if nothing else, the ability to push forward some legislation that allows for them to talk to one another and allows for them to collect data from one another, so they have a bigger picture thing, not just these micro reports, that OPEGA has to sort of piece together. I think that there is a way for us to let these folks talk to one another confidentially and openly all at the same time. So that's what my hope for this group is. My hope for this working group is that we can get to those 2 places, to let those folks talk to one another, and to have OPEGA give us a set of standard questions that we can collect from all of the applicants to these programs. Hope that wasn't too much.
Not at all, Representative. Thank you. I'm not seeing any hands, so I'll go through my list. I've got, I think, five sort of categories of ideas I'm hoping we can think through as part of this working group. Number one, in my experience, both on OPEGA and on tax, I find that when legislators are setting the scope of the evaluation, that is, they are putting down the questions that they'd like answers to. I find that legislators across political affiliations are very curious creatures, and there's no question we don't want to see answered. However, I feel like we've got to exert some discipline in how many rabbit holes we direct staff to go down as part of this evaluation process. So I'm not quite sure what the remedy is for that challenge, but that's one observation I have sort of serving both sides of the house, is that we tend to make the scope enormous. We direct the staff to go down every rabbit hole, which causes these full evaluations to take quite a bit of time to get returned to us. That sort of leads into point number two, which is the timing of report delivery. As lawmakers and staff know, we are in session for 6 months in the odd numbered year and 4 months in the even numbered year. And so when, for example, we receive a full evaluation in August of an even numbered year, which also happens to be an election year, the sitting legislature is not coming back. It's going to be a new legislature and potentially a new administration. And so when a report is delivered in August, for example, it's going to the sitting GOC and the sitting tax committee. But what can they do with that information? So trying to figure out how we get the delivery of the full evaluations synced up with periods when the legislature perhaps can act on the recommendations and implement statutory changes, I think is something I'm hoping we can talk through. The length of time required for the full evaluations, I think, is something I'd like to talk about with this group. When the process started, my understanding is that those first evaluations, the OPEGA staff were really sort of working the project until they felt it was concluded. And so for Pine Tree, as an example, I know start to finish, I think that was over a 12-month period. And then when we tacked on the additional questions from lawmakers, the full Pine Tree evaluation with all the follow-up, that was a 3-year review, I believe, plus or minus a few months. Clearly 3 years is too long for us to spend on one tax expenditure. I think on reflection, if we're going to go at that pace, it's going to take us a long time to get through all of them. And so maybe we need to talk about setting some deadlines to rein in that scope and have the staff do as much as they can, as best as they can in a finite period, rather than an evaluation taking as long as it takes. And that's a trade-off with quality. But I think the folks that have been reading these reports would agree quality is not the issue in our process. These are very exceptionally high quality outputs that the OPEGA staff, in consultation with the other agencies, are producing for us. Point number 4 is one of the common challenges I've heard about from OPEGA staff is that when data is requested from agencies, the format in which it's delivered is all over the place. Sometimes data is delivered as a PDF. And so imagine for a moment receiving a bunch of tax beneficiary information in a PDF format. Imagine the time it takes for OPEGA to unravel that and to transcribe it into a format that's usable. I really think there's no excuse for that. We should consider a statutory change that creates a single form of data that main revenue, FAME, DECD, and the beneficiaries are required to use. Because personally, I'm getting frustrated with the refrain that we don't have workable data to answer question A or B. And I think it's on us to say to the agencies, this shall be the format in which you're producing the requested information, so that that's no longer a barrier to answering some of the questions we have. My fifth and final point is asking us to consider the 3 categories of review that we have currently. We have a full review, which gets a lot of our attention and time, and obviously time from staff. We have the so-called expedited review, which is a bit, I think the name sort of misdirects folks a little bit. Expedited review for, I think, many lawmakers, we confuse that with a review that can be done in a month period. We don't have that currently, but I sort of wonder, is that a tool that we could develop? I think the tax committee members know that oftentimes we're contemplating changes and we are looking to OPEGA to give us some answers, but we understand that timeline for production is lengthy. Sometimes it can be really pushed and we can sneak it in between the 2 sessions, between the long session and the short session, but other times we cannot. Would there be some value in a true expedited review that could be returned in 30 or 60 days? Maybe that's something we could put on the table. For the currently named so-called expedited review, I'm really looking to the tax members to chime in. What value do you get from that? Is it changing your policy making? We are going to be hearing from Maine Revenue Services and from OPEGA that the expedited reviews are time consuming. But I wonder if we can talk through, is the current method necessary? Is it helpful? Should we change it? Should we get rid of it? I'd love to hear what others have to say on that front. So those are my 5 ideas or sort of comments about what I hope we could work on, and obviously can welcome continued discussion here. And I see Representative Kryzak has his hand up.
Thank you, Mr. Chair. I have to agree with you on the delivery of reports and the possibility of having an expedited review. We had several bills in taxation this year that we had to put to the second half or the second session because there are reports that are due in the second session that would, help us make our decisions about those bills. If we could do an expedited report, we could have completed that business in the first half of the session. So I think that's a great idea to have a 30-day, just to give us enough information to make a decision on whether we want to vote for a bill or not. And then, the delivery of reports, having them come in the second session leaves a lot of bills that we can't vote on because we're going to say, okay, in March, we're going to get this report, and then we can decide whether this is a good bill or a bad bill. And I think, as you know, we asked for expedited report this year. And I think that they followed through for us on one bill, and I can't remember offhand which one it was, but I definitely agree that the delivery reports and an expedited report in 30 days would be an amazing help to the tax committee.
Senator Pouliot, you look like you have some ideas.
How many bright ideas today, Senator Libby? I mean, most of what I think has already been said, so I won't waste too much time with that. Representative Kryzak, I think is of critical importance. This historic tax credit is a good example, right? I think there was really good consensus in committee around this being a good idea to move forward, and now it's going through a big formal process, which is great, but it's taking up a lot of time. And had we been able to figure out a way to maybe review that in more expedited fashion during session, we might have been able to act on that. So I do. I also think too that just having been on tax now for a while, sometimes it's just, and I'm just being candid, a little frustrating being a member of tax because we make decisions about policy, but then it doesn't dovetail in with the budget, so it just gets canned or whatever. So I think that, we really could benefit from having some way to, and I know that there's always change with administrations and different constraints that we have in terms of resources and so forth, but sometimes I feel like there's a disconnect between our tax policy and then what we're trying to accomplish with the budget. And then we have discussions about that in tax committee, but then it doesn't fit into the budget parameters. And so it just doesn't go anywhere. And, I don't know that if there's a way for us to better align from a timing perspective, the work that we're doing, and then have that be a part of the budget earlier on in the process. And that might just be, pipe dream, but I do think that at the very least, if we can figure out ways to expedite the review so that we can not have to wait like this time around almost a whole year to act on something that we all kind of pretty much feel. Thanks, Sean. My aide is delivering me a legislative sentiment here in my office. What a great guy. If we don't have to wait so long for a review, it would be helpful. So I guess I said I didn't have anything to say, and then I rambled on saying a bunch of stuff. So I'll shut up now.
Thank you, Senator Pouliot. Senator Bailey, followed by Representative Kryzak.
Thank you, Mr. Chair. So just two thoughts that are occurring to me as I'm becoming educated in this area. I'll be honest that I'm probably the newest member in learning about this process as a member of GOC and as a new member on appropriations. But the two things that occur to me is that I think I would like to explore whether there does need to be some sort of either permanent commission or a permanent subcommittee from, it could be a joint subcommittee with taxation, GOC, appropriations, but some sort of ongoing entity that can be involved in this process to kind of address the reports that come in, for example, in the off session. So that's just something that occurs to me that I think we need to look at. The other item that just occurred to me as you were talking, Senator Libby, and in particular about the timing of reports for full evaluations and the length of time, I think it was your number 3. Again, as being new to this process, I think that that's an interesting idea, although I would not want to see any constraints put on full evaluations in their initial evaluation. I mean, I think part of the reason that the full evaluations may take so long is that, again, they've never been done before, right? I think it's a lot easier to put time constraints on when you're building from the last full report. But I know as a member of GOC, for example, I welcome and applaud and need that full evaluation and whatever time it takes for APEGA to do that so that I really understand the tax expenditure that's being evaluated. So my gut reaction is I wouldn't want to put constraints on them if it's the first time they've done that full evaluation. So those are just two thoughts that occurred to me as I'm listening to the discussion here. Thank you.
Thank you, Senator. Representative Kryzak, I saw your hand go down. Maybe that was from before.
Yeah, I had left it up, but I do want to talk about the constraints that were just brought up. I think when we have some of the other speakers come in, we can ask about that, but it's my understanding that the reason that a lot of these take so long is staffing. So if we come in with constraints, we can also work on the staffing so there are enough people to do it. And then, we can say we want this done in 2 months or 3 months if we properly staff the OPEGA.
Thank you. Senator Bailey, just in response to some of your comments, I think we are on the GOC and OPEGA side sort of experimenting this year with delivering full reviews on a briefer timeline. And so the main historic tax credit review, I think from initiation to delivery, which is expected in the coming months, that's going to be about an 8-month timeframe. So I'm looking forward to reviewing that report to give us some sense of what can be done in that shorter timeframe, and contrast that with maybe Pine Tree Zones, which was an extensive evaluation. If you take all of the production over 3 years, a lot of data gathered. So like from the policymaker perspective, to what degree are we getting more actionable information on that longer time frame, and are we able to get enough information out of a report produced in a shorter time frame? So I'd offer that for consideration for all of us. I know we've got 3 members of this august working group who are also serving on the redistricting commission that has a meeting, a last-minute meeting scheduled at 11. So I want to make sure we get through our agenda and then leave a little bit of time for break for those members to transition. As I said, I'd like to bring these questions back up at our subsequent meetings. So I would ask folks keep thinking about this stuff, and we'll create time in our subsequent meetings for folks to just put these ideas out on the table. Unless there's objection, we'll move to number 4. Seeing none. Number 4 in our agenda more or less lays out meeting dates, which are every other Friday at the same time. I think we've got a sense from committee members that schedule would work okay. Any objection to that? Okay. The next one is a decision for this group to make. I think we'd recommend at the next meeting hearing from at least some of the agencies and interested parties listed on this form. We can try to have them all come for this second meeting. We could split them up over 2. Looking for direction or preference from this group, what you think would be most useful to you. Representative Terry.
Thank you, Mr. Chair. I myself would really appreciate if it's possible for, with the exception of perhaps Pew, but all of our agencies to be here for subsequent meetings, or a member anyway, so we can, if we have questions on the fly, we can grab them to ask them. I hope it's not too much of a time constraint for them, but I think it's really important to get their input and to hear what their experience has been, as well as, going forward, what they have the capacity to do to help with this. Perhaps maybe Pew the first at the next meeting, so they can, I think we are asking them to come to give us sort of a countrywide overview of how these processes work in other states, and see if there may be some improvements we can take away, and maybe some things that we can share with them that are so awesome about us. But for the rest of our own departments, that we have them with us at all times.
Thank you, Representative. Other thoughts? Ariel?
Just a question about whether that includes also the 4th meeting, just so that we can put folks on notice.
I would perhaps say yes. However, they get off the hook if we don't need them by then. I think the 4th meeting we're hoping will be decision time for the members of this group to send out our findings. So hopefully we won't need them, but if we could have them on call, sort of, that would be great, I think.
Sure, that is helpful. Julie and I can put them on notice.
Okay, thank you.
I also have a question, whether you want them to make a presentation or whether you just want them available to answer questions.
I think we should pose the 4, I think under number 3 in our agenda, we send these 4 items to all of those agencies and ask them to provide a brief presentation and be available to answer questions. I think that would be useful. Other comments on sort of the order of operations and speakers? So it sounds like we're going to invite Pew specifically to the second meeting. We're going to invite the agencies listed on this list to make brief presentations. I might suggest that the third meeting, we maybe open up the public comment a bit to other interested parties that are not agencies or nonpartisan organizations. Obviously, when we do our tax expenditures, we get a lot of input from folks outside state government. So that's what I'd recommend for meeting number 3. And then meeting number 4, we'll try to gather what we've learned and put down on paper some recommendations for changes. How does that sound?
Sounds good.
Great. The final bullet here for D, staff will basically work from that 4th meeting to draft a report for us. By November 22nd, we'll be able to work on edits to that report, I believe, over email. I don't know that we necessarily need a meeting unless we are considering some substantial changes to what the draft report says. And then final comments from us will be due by November 24th before the Thanksgiving holiday. Yes, I mentioned the Thanksgiving holiday coming right up. And then our final report's due by December 1st. So quick turnaround for all of this work. Final thoughts, final comments on next steps and where we go from here before we adjourn? Senator Bennett.
Just a quick question. Are we meeting at 9 o'clock on these 4 days? Is that the intention?
Yes.
Okay, thanks.
So I make sure 9 o'clock works for members. Seeing no objection. Yeah, 9 o'clock. Any?
So-
Yes.
Sorry, Senator. So the 8th of October is a no school day and a long holiday weekend. So if we could perhaps Julie and or Ariel find out if there are any super conflicts for our invited guest list as quickly as possible, that would be great. So if we need to make any adjustments.
Julie, Ariel, do you need anything more from us before we sign off for the day?
I don't think so.
I think we're all set.
Okay.
Get in touch with you if we do.
I want to especially thank Julie and Ariel for the time they've invested in preparing for these meetings. And I think we all really do appreciate the materials they've provided. And we've got plenty of reading to do in the next couple weeks. With that, is there a motion to adjourn?
I'll make a motion to adjourn this meeting.
Second it.
Thank you.
I'll
Motion made by Representative Terry, seconded by Representative Kryzak, third by Representative Stover. All in favor? Okay, thank you all. Good to see you. Have a great week.
Thanks,
2.5
everyone.
hour.